Robo-advisors like Stashaway and Wahid were really popular with Malaysian investors in 2020 and 2021. I know a lot of people invested in them, I invested in them, and I know many of you guys invested in them as well. Now though, in recent times, people hasn't been so happy with the performance, and I know a lot of people are waiting to withdraw their money from robo-advisors. Firstly, to address that, I think it's important for people to know that robo-advisors still invest in markets and their performance will generally follow the markets as well. So 2020, 2021, if you invested then, those markets were great, everyone was making money. But if you started to invest a bit later, 2022 was a really bad year across the board, not just for robo-advisors but for nearly any market globally. 2023 though, this year, things have gotten better, and if you're still invested, you would have seen that your performance is probably trending upwards. That aside, today I'll share 5 reasons why I think the average Malaysian investor should still invest via robo-advisors, but I'll also share some people who maybe don't have to invest with them. So these are the outliers, those people who probably aren't the average investor. If you want to invest with robo-advisors, check out some of the options that we have down below in the description. It's available for all Malaysians, and if you use our link or our codes, you will get some nice freebies from those guys, and of course, you're supporting the channel. So, the first benefit of investing via robo-advisors to me is very important, and that is you don't have to worry about choosing and picking your investments. I'm gonna say it up front here, investing is not easy. If you want to DIY, you'll have to think about many things. What asset class are you going to invest in? There's stocks, there's bonds, there's commodities. What countries are you going to invest in? There's US, there's Europe, there's emerging markets, and maybe even what sector are you going to invest in? There's technology, healthcare, so many other different sectors out there, or should you take a more broad approach? These are all important things to consider if you want to DIY invest, and I know that many people just don't have an interest in it. I understand, not all of you guys are like me, stock market nerds who just love following this stuff. I know you guys have a life and you don't want to get into the details. In fact, I have a lot of friends and family who tell me, they want to invest their money. They want to see their money grow. But to them, investing just looks so difficult and they don't want to spend their time learning and understanding and continuously tracking the markets, so they decide to just not invest. And that's a shame. So this is where robo-advisors come in, and they bring the benefit of you not having to understand how to invest your money. Usually how it works is that these robo-advisors will have a set of questions that they will ask you. You just have to give your answers and they will determine your risk appetite. Based on that, they'll construct a balanced portfolio for you. So if, let's say, the answers that you gave show that you're not willing to take risks, they'll probably build a portfolio that's more towards bonds and commodities, because those stuff, typically they're safer. But if you give answers like mine, where you show that you're willing to take risks for higher returns, they'll probably build a portfolio that's more skewed towards equities or stocks, because over the long run, those assets will give you higher returns, but at the cost of higher risk as well. So you don't have to scratch your head thinking about investing in this, investing in that, and all that stuff. Just answer some questions for them to understand your risk appetite and they'll build the portfolio for you. Another thing that robo-advisors do is they help you rebalance your portfolios automatically. If you don't know what rebalancing is, this is exactly my point. There are many things within managing a portfolio that a lot of people just don't understand and they just don't care for, and yet robo-advisors still do these things in the back end. Another reason that I think the average Malaysian should still invest via robo-advisors is that not only do they help you decide what to invest in, like I talked about just before this, they also usually have a quite diverse range of assets for you to invest in. This helps us protect ourselves against certain risks. For example, we don't want to put all of our money into Apple. Yes, it's a good company, it's the biggest company in the world right now in fact, and they have been performing well over the last 10 years or so. But it doesn't mean that they'll do well in the future, right? And if you invest in just a single company, and let's say something bad happens to that company, all of your money, all of your investments would just go poof. So yes, it's good that most robo-advisors in Malaysia are quite diverse. First of all, they invest in ETFs and not stocks, so that in itself is quite good diversification already. So instead of investing in, let's say, 1 or 2 different stocks, they invest in ETFs which can hold tens or even hundreds of different stocks to give you diversification. But even within ETFs, robo-advisors are also diverse. So I'll give you an example. My Stashaway BlackRock portfolio has 18 different ETFs in it. It's so many that I can't even fit into one screenshot. So in this portfolio, how they diversify is in terms of country. They have Europe, they have Asia, they have Australia, and of course US. And even within the US one, They have the S&P 500, which invests in the largest companies in the US. They have an ETF for smaller companies, and they also have an ETF for companies who score well on the ESG rating. On the other hand, if you look at Wahid, it is maybe a bit less diverse than Stashaway, but still, you at least get exposure to 3 different ETFs. So they cover a US ETF, they cover a global ETF, and also a brand new emerging markets ETF. So regardless of which robo-advisor you choose, they will usually give you a good amount of diversification, and this helps protect us against country and sector risk. Again, some people might not even understand this, but that's what robo-advisors are for. Not only do they help you choose what investments to make, they also ensure that you have a diverse and well-balanced portfolio. Moving on to my next point, this to me is extremely important, especially for new investors, and that is robo-advisors allow you to invest at a very small amount. So most robo-advisors here in Malaysia, minimum deposit is just 10 ringgit. Wahid has an initial deposit of 100 ringgit, but after that you can make deposits in 10 ringgit increments. And this is good. This is good for the average investor. This is good for the average Malaysian. Usually I would say for investments, like if you want to DIY invest into stocks or if you want to invest in mutual funds, you would usually need, I would say at minimum 1000 ringgit. And even then, it's probably not enough. And we always recommend you guys to start investing as early as you can in your career. But we also recognize and acknowledge that not everyone, especially people who are just starting on their careers, have a lot of money to invest on a consistent basis. So robo-advisors help you do just this. Instead of, having to save up a lot of money, being demotivated, and then finally investing, you can invest every single month from as low as 10 ringgit. And it will give you so much diversification. So let's say even if you had 1000 ringgit, if you wanted to DIY invest and have 18 different ETFs in your portfolio, like my Stashaway BlackRock one, that's just 55 ringgit per ETF, and that's a bit too low for you to do yourself. So if you don't go through robo-advisors, you probably can't invest as often, and you probably can't get the diversification benefit that you would get with just a small portfolio. Early on in my career, I tried to invest in stocks myself via brokers. Of course, this was my interest. I wanted to invest in individual stocks. I still remember my first company, Maybank. But after a while, I realized that with such a small portfolio, it just didn't make sense to do it myself. I just didn't have enough money. I couldn't buy enough stocks. And once I realized this, I started to channel more of my investment money towards robo-advisors, and I still do it until this day. On the same note, the fourth reason why I like robo-advisors so much, and I think many people will also benefit from this, is that robo-advisors make it so easy for you to DCA and consistently invest, but passively. This is because most robo-advisors here have an auto invest feature. So basically what it means is that you can set it up, you have to set your frequency. Usually you can choose monthly, quarterly, or yearly. The easiest one is probably monthly, and then you have to set when you want to invest, maybe one day after your salary because you want to pay yourself, right? And then finally, how much you want to invest. So once you've got this all set up, the robo-advisor will automatically deduct the amount from your bank account on a recurring basis, and you don't have to think about anything else. This is autopilot to the max. This is the most passive way to invest. Firstly, you don't even have to think about what to invest in. Then you don't even have to think about how to build a diversified portfolio. Now, to top it all off, you don't even have to remember when to invest your money. Everything happens automatically every single month. To me, this is truly the most passive way to invest. So currently, I DCA 120 ringgit a month into my Stashaway portfolio, and with 18 different ETFs in it, that is on average 7 ringgit per ETF or $1.50 every single month going into it. It is a very small amount, but again, this is the reason why I invest in robo-advisors and why most people probably should as well. With such a small amount, 120 ringgit, if I wanted to do it myself and I want to do it via a broker, it just wouldn't make sense, because even if my investment amount was 7 ringgit per ETF, the fee, I would say at minimum 1 ringgit 50 cents, that is 20% of my investment amount. That's just way too much. As soon as I invest, I'm already down 20% and it's going to take me time to recover. So I've been doing this monthly deposit thing into Stashaway ever since I started working. I've never made any lump sum investments. I've only done it with Stashaway Simple, but never with the normal, Stashaway investing portfolios. I do this passively. I don't check into anything at all, and today, 5 years later, I have over 15,000 ringgit in my stashaway portfolios. So the fifth and final reason that I think most Malaysians should invest via robo-advisors is that the fees are really good for small accounts. So first of all, yes, robo-advisors do charge you an additional fee on top of the standard fund management fees. Usually this is around 0.2 to 0.8% depending on how much you invest. You might be thinking, why would I want to pay these robo-advisors an extra fee if I just do it myself? All I have to pay is just the ETF fee and nothing else. Yes, you're right, but if your account is small, this fee actually makes sense. Like I said earlier, if you try to invest yourself via a broker, you will have to pay a fee for every trade that you make. And this is not something that you'll have to pay with robo-advisors. So again, let's say you have just 100 ringgit or even 500 ringgit, I would say, to invest every single month. If you try to split it into many different ETFs and do it via broker, you'll pay a fee for every trade, and as the example I shared earlier, it may not make sense because you'll pay so much in sales fees. If you have a bigger portfolio, so I would say in the hundreds of thousands of ringgit, then it probably is worth it for you to learn how to DIY invest just so that you can save on fees. But even then, if you have a big portfolio and you don't want to go through the hassle of thinking what to invest in, all the other 4 benefits that I shared earlier still make sense for you, then by all means, invest via robo-advisors. So who doesn't fall into this category? Who probably don't have to invest in robo-advisors? First of all, I would say if you are familiar with brokers and you know how to manage your own portfolio, then yes, maybe you don't need a robo-advisor. So stuff like diversification, following trends in the market, if all of this stuff comes naturally to you, if you're interested in the stock markets like myself, then yes, you can go and DIY invest yourself. Maybe you can outperform robo-advisors. So the second type of person who probably don't have to invest via robo-advisors are people with large investment accounts. So people with, like I said, hundreds of thousands of ringgit. Learning to do it yourself, DIY via broker, will 100% save you a lot of fees. But again, this is completely up to you. Weigh up the pros and cons. If you're just not interested in learning how to use a broker, if you're not interested in following market trends, then maybe robo-advisors will still be good for you. So robo-advisors help us with many things. They help us have a diverse portfolio and it helps us invest globally. All of this without us having to know anything about investing. They also help you invest money even if you have very little to start, and they also help you DCA and invest consistently on a very passive level. I know some people will say robo-advisors don't perform as well, you should just DIY and you can make more money yourself. Yes, that is true, but that is for people who are interested in investing and are interested in following market trends. From my personal experience, that is not the average Malaysian. The average Malaysian is just someone who wants to invest their money and not care about anything else. They want it to be extremely autopilot, and that is why people like investing in mutual funds. At the end of the day, robo-advisors makes investing easier for most people, and it will help many Malaysians. After all, it's much better for you to start investing even though it's not so optimal than to not invest at all. So, if you guys are sold by this video and you want to start investing in robo-advisors, check out your options down below. We have some links, we have some codes, you'll get some freebies from those guys, and we'll also get a kickback. But if you're interested in learning how to invest yourself, then subscribe to our channel, turn on notifications, because we will be coming up with a series on how to start investing for complete beginners. Thanks for watching this video to the end, guys. Give us a huge thumbs up if you enjoyed this video, and see you guys in the next one. Peace out.